Good afternoon, everybody. Going to go over our Forex trades for today, Friday, April 15th. We had one trade which was actually entered late yesterday and exited last night before we shut things down, probably a little prematurely because we did have a higher target, but we'll go over that in a second. First, economic news. Just want to touch base on a few things. Yesterday, the government in the United States has actually figured out how to reduce the deficit a little bit. They've decided to lower Social Security payments to those that can receive a spousal credit and delay their Social Security for until the age of 70. That is going to end as of April 29th. So just wanted to point that out. It's sort of the first notch at Social Security in a long, long time as far as reducing it. So that's going to be the first, and you know what's going to be coming next. Regular Social Security payments will be getting reduced sometime in the future. That's a guarantee. Whenever the government starts doing something into one program, you know it's never just a one-op. It's always going to continue. Bank of America came out and said that 32% of global fixed income products are currently subject to direct central bank purchases. That's absolutely amazing. And we know that this year alone, every new 10-year treasury issued by the United States is going to be bought by the Fed, and that's a fact. Let's see. Consumer sentiment this morning tumbled to the lowest since September. University of Michigan expresses concern about the resilience of the consumer. U.S. industrial production plunged to 2008 levels. Not surprising there, although it's just another bad point for the economy. Economic outlook plummets according to a recent Gallup poll. Of course, they're citing rising gasoline prices, but I mean, come on, gas came down a bunch over the past year. It's only ticked up a little bit, so that's not the reason why outlook is plummeting amongst polls done by the Gallup. Came out this morning, Bank of Japan. They already own 52% of all Japanese ETFs, exchange traded funds. All the assets, not just the amount of ETFs, like let's say there's 100 ETFs offered in Japan that they own 50. No, they own 52% of all the assets in those ETFs, and they want to buy more. Absolutely amazing what's going on. Goldman Sachs, they announced this morning they're cutting staff, the biggest cut they've had in many, many years as trading and deals have slowed. And here the Fed and central bankers claim that they don't impact markets. You've got Goldman Sachs, one of the premier, if not the premier Wall Street firm, having the biggest cuts in God knows how long. You've got the Bank of Japan owning 52% of all assets in ETFs. And you have Bank of America saying that 32% of all fixed income markets are subject to central bank purchases. How could central bankers and the Fed say they're not impacting markets? They're creating the most illiquid markets ever seen on Wall Street and seen in other markets around the world, stocks, bonds, you name it. And that's a pretty scary thing, because when bad news, or when not even bad news, because we're getting a ton of bad news, but when markets decide to correct, and it's coming, it's going to be fast and furious. That's for sure. Just this morning, Goldman Sachs, another thing that they came out with. A lot of people are saying, with all this bad economic news, why is the U.S. stock market, as an example, continue to chug higher over the past month, when it's been 11 consecutive weeks that smart money, hedge funds, big institutional money have been net sellers. I mean, they're not all selling, but net sellers as overall. 11 straight weeks. Why is the market continuing to go higher? And Goldman Sachs says it's very simple. Corporate buybacks saw the second highest level since 1952 in last year, and this year alone they expect corporate buybacks to surpass $450 billion in corporate buyback. So corporations are buying back their own stock, reducing the amount of shares out there, therefore creating higher stock prices. So you have the smart money net sellers, 11 straight weeks, but yet market continue to go higher. Never seen anything like it, and we know it's all coming. It's going to come to an end. It's just a matter of how severe is that end going to be. It could be as bad as 2008. It could be worse than 2008. Well, we're going to find out soon enough. The New York Fed this morning came out and cut its first half GDP forecast to 1.0%. So that's not looking too well there either for GDP. Anyway, so enough of the gloom and doom. I hate to sound negative and bearish. We've really been bearish on housing market. We've been bearish on equity markets, but our style is to go with big money movements, whether that's up or down. But we also want to report the facts. We want to report the economic news the way it is and not sugarcoat it the way a lot of mainstream media does. So not to scare anyone, but you have to dive into the numbers when you're in this business, and you got to figure out what's going on. So let's get to the trade here. We had one trade in Kiwi dollar, US dollar last night. We liquidated it before we shut things down for the evening. We had 20% of our normal size. Went long 0.68534. And on this move up, we took it. We took the 28.7 pips. Size adjusted basis 5.7. Our target was anywhere between the figure of 69 and about 69.50. And you can see what it did several hours after we liquidated. Around 2:30 in the morning, 3 o'clock in the morning, it hit the figure of 69. And then around 6 o'clock this morning, before we're in the office, it hit 69.25. It hasn't hit our final target up here of 69.50, but it did hit two of our targets, which was 6900 and 69.25, as you can see all this resistance here. So it was a really solid trade. Unfortunately, the move happened mostly while we were not in the office. We didn't peace out because, one, we were shutting things down for the evening, and two, we only had 20% of our normal size. If this move had happened earlier, could have sold maybe a half or 3/4 of it and held a little piece and see what happened overnight. But in the end, we'll take it and we'll move on to Monday. So if that's it, that is it. So have a great weekend, and if any signals come out the rest of the day, we'll send them out. If any trades go off Sunday night, Monday, we'll do another video Monday. Have a great weekend.